It is now my pleasure to turn today's program over to Charles Gluck. Charles, the floor is yours.
Thank you very much. Welcome, everyone. I want to welcome you to today's webinar called What You Need to Know About Financial Reporting for CPC Plus. I'll be your moderator today. Now, your phones are muted, but you may submit questions using that Q&A feature that Ian just discussed. Or after the event, you can send questions to cpcplus@telligent.com. You can download today's presentation and other resource files from that files location in the Content tab that Ian discussed. We have two presenters with us today, Amy Gibson and Joe Grundy. Joe, I will turn the floor over to you.
Thank you, Charles. Hi, everyone. Thank you all for joining us for the CPC Plus National Webinar. We wanted to make sure that you know that this is the first of several key resources on financial reporting and reconciliation that will be made available to you over the next few months. There will be an on-demand webinar available for download in November that will provide more technical details regarding how you'll actually report financial data into the CPC Plus practice portals. And then on December 14th, we'll be holding a financial reporting office hour. This will be an open session where we focus on addressing the questions participants raised regarding the upcoming financial reporting and forecasting processes. Just so you have it on your calendar, the 2017 financial reporting window will correspond with the 2017 Q4 reporting period, which runs from December 25th to January 19th, 2018. I'm joined today by my colleague, Amy Gibson, who will be answering questions and directing any forward from the chat as you pose them. We are also joined by two wonderful practice participants who will be introducing later on in this webinar. Next slide. A quick review of today's learning objectives. By the close of this webinar, you should be able to understand how your practice can track CPC Plus related revenues and expenses, understand your financial reporting requirements as CPC Plus practices, and finally, you should be able to begin identifying your practice's strategies for budgeting and accounting to support your ongoing transformation towards delivering more comprehensive primary care. Next slide. Everyone should be fairly familiar with the CPC Plus driver diagram. The financial reporting and reconciliation work we're discussing today falls squarely into the strategic use of practice resources. One of the central objectives of the CPC Plus model is to align enhanced payments with comprehensive primary care delivery. The financial reporting requirements allow CMS to learn how effective, and just as importantly, how scalable, the CPC Plus enhanced payment model is in supporting real-world practice transformation. Next slide. The goal of today's webinar is to provide you with a high-level understanding of how to engage with the CPC Plus financial reporting process. To start with, you need to understand that you'll be tracking elements of both your practice revenues and your practice expenses for CPC Plus revenues. So to create an effective budget, you really do first have to determine how much revenue your practice receives. You are only required to report details for CPC Plus related revenues that you receive from CMS and other CPC Plus payer partners. You will also provide CMS with your total revenues for the year, including all income sources, not just limited to CPC Plus relations. However, you will not need to itemize these revenues or provide additional details to CMS. Expenditures refer to all expenses incurred by your practice. For CPC Plus financial reporting, you will report the approximate clinical labor, non-clinical labor, and non-labor expenses related to carrying out CPC Plus activities in the year. There's actually a third component of financial reporting as well, but it's something that you all are already tracking and managing. You'll need to provide the total number of patients attributed to your practice. This includes CPC Plus beneficiaries, non-CPC Plus beneficiaries, and uninsured or cash pay patients. Again, this is an aggregate number, so you only need to provide specific breakdown of your CPC Plus attributed lives. So, to reiterate, your CPC Plus financial reporting, for CPC Plus for financial reporting, my apologies, you need to report both your aggregate level practice financial data and a more specific breakdown of CPC Plus related finances. For the aggregate level data, just provide the bottom line totals. CMS does not need you to provide a breakdown of non-CPC Plus related finances. So no need to specify any grant funds you have coming in or breakdown of payments that you receive from payers that aren't participating in CPC Plus. Next slide. CPC Plus has a two-step financial reporting process. Every year, your practice will need to complete both a financial forecast and submit your year-end financial actuals. Both steps will take place during the upcoming Q4 reporting window, which will open from December 25th and run through January 19th, 2018. We'll be discussing the details of reporting your actuals first, and then wrapping up the presentation content with how you can prepare your financial forecast. Next slide. Some may be curious how CMS is going to use the financial data you all are going to be reporting through CPC Plus. As I mentioned earlier, the primary use of this data really will be to figure out how Medicare can better align fee-for-service payments to support practices in delivering more robust, comprehensive primary care services. More specifically, CPC Plus provides an opportunity to learn which areas of practice work require more financial support and ongoing investment in order to make the CPC Plus model of care delivery fully operational in the real world. Next slide. To get us started with the substantive portion of our webinar, I want to introduce Ms. Mary Turner. Let me share up front that we're going to save as much time as possible for open Q&A at the end of this webinar. Please submit any questions you have for our presenters via the chat. Ms. Turner is a practice administrator for Tri-Valley Primary Care, which is participating in the Greater Philadelphia region of CPC Plus. She actually has a lot of experience with financial reporting, so we want to engage her as a practice administrator in an independent practice. So to start with, Ms. Turner, how did you determine the portion of time staff dedicated to CPC Plus activities in your practice?
Sure. At Tri-Valley Primary Care, we are physician-owned and physician-led. So early in the year, we tasked our Compensation, Benefits, and Personnel Committee of physicians to begin looking at the staff and provider roles and how they related to CPC Plus. So we decided to use the 6 clinical staff job descriptions we had in place to allocate a percentage of job duties as a CPC Plus expense. We also developed a new clinical job description for our care managers. We looked at each job description and the staff members' actual day-to-day activities. For our physicians, we developed 4 tiers of involvement in CPC Plus and developed physician job descriptions based on those tiers. Each tier has a defined expected monthly time commitment that extends beyond the provider's usual face-to-face patient encounters. We are paying providers a fair market rate for those hours. We are currently looking at select administrative staff members, particularly our incentive specialists at each site, who tracks patient compliance with clinical quality metrics per contract and who conducts patient outreach based on identified gaps in those metrics.
Great. Can you just take a moment and expand on how you categorize those provider tiers based on their engagement with CPC Plus related activities?
Sure. As I stated, we created 4 levels of physician involvement. The first tier of physician involvement is our standard expectations from every physician. It includes participation in daily huddles, monitoring patient compliance with care management, and referring patients into care management, collaborating with our newly embedded services of a dietitian and behavioral health, risk stratification, participation in weekly team meetings and monthly performance meetings, and more. This position is funded on a site basis. Our second tier of physician involvement is the site lead. This person is doing all the activities of the Tier 1 physician and more. They are overseeing the program at their site, participating in clinical committee meetings, disseminating information from those meetings, and monitoring site compliance. They are the physicians leading the weekly team meetings and the monthly performance meetings at each site. They review site data from payers, and they organize the PFAC meetings. They are expected to participate in CPC Plus webinars each month and are the direct supervisors of the care managers. This position is also expensed at the site level. We have a third and fourth tier of involvement that are both Tri-Valley-wide leadership roles. They are similar roles with distinct expectations. So first we have the clinical coordinator, who is responsible for overseeing the entire program. They're neck deep in the CPC Plus implementation guides and other CPC Plus documentation. They develop the clinical workflows that will be rolled out to each office for the staff, the embedded services, and the physicians. They review Tri-Valley data from payers, analyze for trends, make recommendations based on that data. They lead all the clinical committee meetings. They also developed a work plan for year 1 in CPC Plus, and they ensure that all sites remain on track for the CPC Plus care delivery requirements. This role is funded by all the sites, but it's split between the sites based on panel size. And then finally, we have our ECW lead physician. He works closely with eClinicalWorks to develop workflows, make sure that all the data elements are being captured properly, and disseminates those workflows to the staff and providers. He spends a lot of time validating data and testing and retesting and validating again throughout the year. He's also the lead physician who's working to develop our telehealth program, which hopefully will be rolled out by the end of the year. This role is also expensed across all 7 sites, split by panel size.
Wonderful. So that's something that I bet a lot of other practices, all size and types, independent or system affiliated, could really glean some insight from in terms of how to align provider engagement with CPC Plus in terms of the time that they're expected to participate. So kind of expanding from that, how did you align the categories of expenditure with your staff's clinical and non-clinical activities?
First, we made sure all of our staff members were assigned to the correct job descriptions. Sounds easy, but it was a big step. We also made sure that all of our clinical staff continue to work to the top of their license, so that clinical staff's not spending time doing things that non-licensed employees could do. Then we took those job descriptions and compared them to the care delivery requirements of CPC Plus. We determined that the majority of our clinical staff daily activities were directly related to CPC Plus. Our clinical support levels 1 and 2, primarily room patients, they're involved in every step of the patient's care delivery continuum, from pre-visit planning to identifying the gaps in care for each patient before they arrive, to rooming patients and assessing specific data elements in the charts, like fall risks, PHQ-2s, PHQ-9s, and things like that. Our rooming staff is heavily involved acting as a liaison between the patient and the PCP, and also between the PCP and other providers who are part of that patient's care team. Our clinical support levels 3 and 4 spend most of their day conducting telephonic visits, offering alternatives to the traditional face-to-face visit. They're also performing our TCM processes, following up with patients post-ED or post-discharge. We have a clinical supervisor and assistant supervisor at each site. They do all the tasks of the preceding job descriptions, plus perform oversight, ensuring that each member of the team knows their role and that they monitor employees' performance in relation to the defined workflows. We also looked at how much time each job description spends doing things that are not CPC Plus related. This might have been a little bit easier to quantify than everything else. Tasks such as ordering supplies, stocking exam rooms, or taking inventory are not related to any of the care delivery requirements, so time spent doing that should not be allocated to CPC Plus expenses. So across all 6 job descriptions, we determined that on average, 75% of their time was spent performing tasks that are directly related to CPC Plus. With our care managers, we determined that 95% of their salaries could be counted as a CPC Plus expense. Their jobs were a direct result of our participation in the program. And the reason we chose 95% as opposed to 100% is that sometimes our care managers get called into tasks that are not CPC Plus related, such as maybe opening the office or closing the office. It would be a very small percentage of their time, but it's a possibility that not every minute in the day is spent doing care management tasks.
So given that, that framework and that approach, out of all the expenditures your practice tracks, which ones are the most complicated to report on?
I anticipate that the most difficult part of the reporting is going to be categorizing our staff expenditures into the buckets identified by CMS. So the traditional visit versus alternative visit versus care management, the time spent in team meetings and QI and other CPC Plus activities. Unfortunately, our job descriptions are not based on licensure, so there isn't a direct parallel between job description and an employee's license, or RN, LPN, MA. So at this time, we're still working on a solution to tackle this portion of the reporting. I envision working with the site leads at each office to identify who is in which bucket, and then coming up with a general percentage of time they spend on each expense category. So I'll average them across all the employees for each site to determine the percentage of total CPC Plus expense in each category.
Perfect. Thank you so much, Mary. And again, for our participants, if you have any questions for Mary or the faculty staff or our presenter down the line, please post them in the chat. We will capture them. If we can't answer them right away, then we'll raise them during the open Q&A at the end of the session. Next slide, please. here's the ongoing timeline for your practice's CPC Plus financial reporting requirements. As we discussed earlier, you'll need to complete both steps in the financial reporting process annually, starting with the upcoming Q4 2017 reporting period, which runs from December 25th to January 19th, 2018. First, you'll need to complete the submission of your 2017 financial actuals. You'll be able to find more technical details about how you'll submit your financial actuals via the upcoming on-demand webinar I mentioned earlier. Once you have submitted the actuals for 2017 and have a better understanding of what resources and staff time went towards CPC Plus related work, you will complete your financial forecast for 2018. Your forecast should build directly off the data you collected for your 2017 actuals. Next year, as we close out Q4 of 2018, you'll get to go through this process again. Only then you'll be able to compare your financial forecast with your actuals for the year. Next slide. We touched upon this earlier, but one of the most important aspects of financial reporting is to determine and report the % of your budget that goes towards CPC Plus related work. Every practice is responsible for developing a method of identifying what portion of their practice's overall budget goes towards said CPC Plus work. Mary shared how Tri-Valley Primary Care identifies their CPC portion. Later, you'll hear how another practice uses a different process for identifying the CPC Plus portion of their budget. I raise this to highlight that there's no one-size-fits-all process to determine the CPC Plus portion of practice financials. You and your teams will need to determine how to continue refining a process that fits your practice dynamics. If you have any questions for how to get started with this, I recommend you open the CPC Plus Financial Excel-based tracker, which you can download from this webinar or find on CPC Plus Connect. Next slide. Just as a reminder, as we get more into the weeds, the primary purpose of submitting this data is so CMS can better learn how to align payment models to better support primary care. It may not feel like it, but the work that you will be doing through the CPC Plus financial reporting process is enormously important for changing how primary care practices get paid by Medicare, by Medicaid, and by commercial payers. This is a learning opportunity for primary care practices to help teach the payers what type of financial support they actually need in the trenches. So, to ensure that we have as much time as possible for your questions, I won't be reading these detailed pages verbatim. Instead, I'll provide an overview of each of the categories that you should be using to clarify financial tracking. If you're looking for specific guidance or examples, again, please refer to the CPC Plus Financial Reporting Guide or the optional Excel tracking document, both of which are available for download on the webinar or you can find on CPC Plus Connect. So starting with care management fees, these are payments that are non-visit based that you receive from Medicare, fee-for-service, and CPC Plus payer partners to provide wraparound services to your patients. For reporting purposes, these should be payments your practice receives that are in addition to payments for services provided. Quick note, Medicare will pre-populate the Medicare CMS your practice receives in your CPC Plus practice portal, again, once the reporting period goes live on December 25th. Medicare fee-for-service comes as no surprise. This is original Medicare and includes the revenue generated by your practice by billing for services through Medicare Part A and Part B. Alternative to fee-for-service payments are the payments you receive from Medicare and CPC Plus payer partners that are intended to replace or move away from traditional fee-for-service revenue. For example, the comprehensive primary care payments for Track 2 practices is CMS's alternative to fee-for-service payments. Other payer partners in your region may provide a CPCP-like payment or global payments, or may have made increases to capitated payments that your practice already received. Another quick note, I want to clarify that your CPC Plus related care management fees do not count towards alternative payments. Please do not double report on your CMF payments from CMS or other payer partners. Again, total practice revenue is the total amount of income your practice takes in during the year. This should include all CPC Plus revenues, non-visit-based payments, and alternative to fee-for-service, and other revenues, such as fee-for-service payments, grants or awards, and any performance-based bonus or incentive payments that your practice kept. CMS uses this information to understand the relative impact of CPC Plus on your practice's revenues. Only CMS and their subcontractors will use this information. They will not share the individual practice revenue information with others. Next slide. Okay, so we'll spend some more time with this slide because tracking expenses appropriately is probably causing you the most heartburn at the moment. First, let me reiterate that you will need to report both the total expenditures for your practice and provide a breakdown of CPC Plus portion of those expenditures. Perhaps the most important thing I can communicate to you today is that determining the CPC Plus portion of your expenditures is not an exact science, and that CMS is well aware of that fact. No one expects you or your team to do motion studies of each individual member of your practice staff every day from now on out. As we mentioned earlier, your practice needs to decide how you and your practice will be determining the CPC Plus portion of your expenditures. Also, you need to capture that process in writing so you and your team can always refer to it and maintain consistency. In order to avoid any confusion, I will be working through the examples. So for non-labor expenditures, facilities expenditures include your office expenses such as rent and equipment costs. Supplies are other operating expenses at your practice, such as for printing, postage, etc. Training, travel, and conferences are expenses related to training, travel, and conferences. Consulting fees are similarly fairly straightforward. Health IT equipment and maintenance. This should include your EHR and any health IT services your practice contracts for, as well as maintenance for those products. Although you cannot use Medicare care management fees to pay for health IT, you may use other sources of revenue. Non-health IT technologies are the costs associated with technologies aside from EHR and other health IT costs, such as licensing, Microsoft Office. Depreciation costs are costs associated with the capital purchases made by your practice or on behalf of your practice. Your practice should always follow best practice for depreciating its applicable fixed assets. For example, buildings, furniture, software, equipment, etc. Non-CPC Plus activities are comprised of operational work and other non-clinical activities that your practice carries out. This category includes activities that existed in your practice prior to CPC Plus implementation that do not change as a result of CPC Plus, such as managing your office's lease, ordering or maintaining supply levels, or other general office management activities. Labor expenses. This is where it gets interesting. To start off, please know that labor expenses can be more extensive than you may expect. It includes all the staff in your office, as well as identifiable labor expenses from your practice that your practice gets from external consultants or from, for example, a centralized system office. Next slide. So let's take a deeper dive into labor expenditures. The clinical roles may seem fairly straightforward to you, but for CPC Plus, you will need to examine each staff role in your office and map those to specific CPC Plus functions. By aligning staff roles with CPC Plus functions, you can get a far more robust understanding of how much time and attention each member of your practice team is dedicating towards CPC Plus related work. Next slide. Here are a few tips for how to get started with allocating the CPC Plus portion of expenses. So upfront, please know that these are not intended to tell you how to figure it out. These are merely examples of ways you can effectively track expenses. For establishing your practice's non-labor allocation, ask yourself, what percentage of your facility can be allocated to CPC Plus activities? What percentage can be allocated to support IT? Document how you came up with those calculations. I cannot emphasize enough that documentation is incredibly important, and that should come as no surprise. To begin identifying practice's labor expenses, start by framing it as a routine and regular part of your business operations. For example, you can either run the allocation weekly or take weekly financial snapshots. You can also use the spreadsheet provided by CMS and available for download here as well. Don't forget to include the benefit costs for labor expenditures. To begin organizing your budget, you can start by allocating expenses such as supplies or equipment to established or new cost centers, as opposed to figuring out a percentage from your budget for every single item. Next slide. To get a better sense of how you can operationalize these tips and CPC financial operations more generally, it is my pleasure to introduce Ms. Tamara Lavengood, from the Mercy Family Medicine Clinics in Durango, Colorado. Again, just as a reminder, you can enter questions for either the CPC Plus National Learning Network faculty, the participating CMS stakeholders we have on the line with us today, and for our awesome practice participants via the chat. Ms. Lavengood, how did you align the categories of expenditure with your staff's clinical and non-clinical activities?
Hi, Joe. Thank you. So I aligned the clinical activities with the 5 CPC Plus functions. And I looked at each function and identified what are the change tactics that we need to do to accomplish that task. By starting there, it gave me a framework to separate out the CPC Plus activities, both clinical and non-clinical. But, I did come to realize that there is a lot of work our staff has been doing that would count towards CPC Plus work. And then identify all the roles, job descriptions that you have in your clinic. Get an individual to represent that role and have them look at the CPC Plus activities that are determined from the 5 functions. And if they do anything that pertains to that, to the accomplishment of that activity, have them estimate the amount of time on a daily, weekly, or monthly basis. So in terms of clinical versus non-clinical labor, think of actions directly related to the patient as clinical. So providing 24/7 access with after-hour call coverage, nurse triage, care planning with the patient, patient outreach for services, self-management support, shared decision-making, behavioral health integration, care management. All of these are clinical labor. And non-clinical labor are things like daily huddling and debriefing, quality team meetings, weekly team meetings discussing your clinical quality measures and utilization measures, time spent documenting the clinical quality measures, and running registries. And, sometimes those lines get blurred. And so ask the person doing the function if they think their clinical labor is, or if they think that what they're doing is clinical labor or non-clinical labor. And then document how that was determined. Just like Joe said, just document everything. How the clinical, non-clinical was determined and how you're calculating for that time.
Perfect. So using or engaging your team members to self-report their time seems like a fairly low administrative burden approach. So do you think that practices can overcomplicate this process?
Oh, yeah, you can definitely overcomplicate it. But the way that we did it, and it's different, and what I loved you saying is that it's different for every practice. This was really at the practice level, and it really was the clinic determining how we were spending the money. But you can definitely overcomplicate. In fact, in CPC Classic, I was doing time trials and, for all the CPC activities, and I tracked time depending on the staff on a daily basis, and that was way too much. So we do have to make it simple. So how do we pull out the CPC activities can be challenging. But remember that we are the ones who do the work. And when asked about a certain activity, staff can generally estimate how much time they are spending doing it, either daily or weekly or monthly, and then adjust that time over a 40-hour work week into a percentage of those 40 hours worked. And then that percentage is the norm for everyone in that position. And then you can take the percentage of everyone's annual salary and come up with an expenditure for that job description. And then if certain individuals do more than that norm, that can be included as additional expenditures. I have to tell you that I've already done this for our physicians, and it took our physician champion about 10 minutes to tell me their general time spent with CPC Plus activities. We just looked at the list of CPC Plus activities from the 5 functions and separated out the clinical from non-clinical. For example, some of the clinical activities for the first function on access and continuity, he estimated the time for after hours on call. And for the second function on risk stratified care management, he estimated the time for risk stratification, which involved his clinical intuitive judgment, and the time taken to discuss his high-risk patients with a care manager. For non-clinical labor, looking at function 5, he estimated the time taken on a daily basis for huddling and debriefing with his team.
So you said something there that I kind of want to touch upon. You're right that, you and the other practice staff participating CPC Plus are the ones doing your work. For those practices that aren't affiliated with the larger health system or not as comfortable with financial operations, do you think they absolutely have to get an accountant to manage the level of complexity that the financial reporting process requires?
No, not at all. We are part of a huge healthcare system in Colorado, 150 clinics, 17 hospitals. We were the only CPC classic practice. And so what we learned, that can be just spread throughout the system, but you do not need an accountant with this. You just need to have somebody in your practice that has a little extra time to manage and track the CPC-related finances. This could be a provider, a care manager, or a program manager like me. But remember, you just have to document. Good documentation is incredibly important.
So earlier, as we kind of got to know each other and talk, you shared with me that your practice was audited as part of CPC Plus Classic. What was the one major takeaway that you had from that experience?
Okay, well, I think I have two, but that was really one of the best things that happened to our clinic was to be chosen for a program audit, including the budget. And the main thing that I learned is that it is much easier to figure out the percentage of time that pertains to those CPC Plus activities for each job role. And you don't have to do the time trial studies, but just it really is an estimate, and you're talking to people that are in that role. And then to take an average of the annual salary, because, I did have to submit W-2 forms, and it was where this salary and how much of a percentage can I attribute from that salary for CPC Plus expenditures. And so then another thing is just to average all of the salaries for a particular role. You will have like an MA that's making a lot more than a new MA. I just would take the average of that annual salary and then subtract the percentage of time that the CPC Plus activities were taking. So, just to definitely do averages and then do a percentage of that, of their salary as your expenditure. I just wanted to mention this is pretty cool. So after I had that physician champion, he gave me his estimates for a 40-hour work week and always work off of a 40-hour work week. 28% of the physician's time was attributed to CPC Plus activities. So that was actually quite a bit. Then the other thing that I realized is that, CMS they're trying to figure out how much money and time and resources does it take to provide our comprehensive primary care. And they are trying, they are on our side. And they definitely are giving us the resources that we need.
Perfect. So that actually kind of segues perfectly to my next question, which is, how would you recommend other CPC Plus practices engage with the commercial CPC Plus payer partners?
Well, this is actually a very good question. It is so important that you reach out to your payer groups. Find a contact person that you can talk with, develop a relationship with them, tell them what they are giving to your clinic and how it is helping. Now, that really encourages their commitment. Also to use this contact to verify your payments that you're getting into your clinic. Sometimes payments come in and you're not sure who they're from or what they're for. Sometimes it's not very clearly written. So when you are submitting your revenue for CPC Plus, it needs to match what the payers are reporting. So reach out to them and make sure that you are receiving what they're saying that they have given. So talking to your payers, it's a good thing.
Thank you so much, Tamara. With that, next slide. So we're actually going to switch tracks a little bit to begin discussing how you and your practice can begin preparing for your first CPC Plus financial forecasting process. The most important aspect of this preparation is understanding the right perspective. So I actually recently came from working in CPC Plus practices. I can vouch for the natural impulse of saying, Well, I have to spend all the money I got from CMS this year. It is what we've all been trained to do through prior practice transformational programs. Check the box for medical home. CPC Plus isn't structured that way. There are far fewer boxes you can check to meet the baseline expectations. The question you and your practice team need to ask yourself is, I have this money. How can I use it to improve patient care? CMS wants to learn what you are interested in doing with your enhanced funds, not trying to tell you how to spend each dollar you get through being a CPC Plus practice. Also, you'll never need to tackle CPC Plus financial forecasting in a vacuum. Again, your forecast should always build directly on the data you collected to submit for the past year. So in this case, your 2018 financial forecast will be built on the actuals you report for 2017. Using something like this 3-step planning tool can help simplify the process of getting started with CPC Plus forecasting. First, identify your practice goals for using enhanced payments. Then, identify the high priority areas of practice transformation where you can move the needle by investing time and resources. Finally, review and prioritize each of the CPC Plus change delivery requirements and align it to your goals. This 3-step process should give you a general roadmap for starting your practice's financial forecasting. Next slide. Here are a few questions you can use to further frame out how you can use your enhanced CPC Plus revenues to improve patient care. Start by asking yourself, based on practice feedback reports, other payer reports, and your EMR data, what is the one goal that your practice should focus your resources on in 2018? What additional resources are needed to achieve that goal? Do you need to make staff, equipment, or facility changes? Finally, what can you do tomorrow to start working towards that goal? Next slide. Taking this a little bit deeper, here are some sample questions you can use framed in the same categories as the financial actuals you'll be using once the CPC Plus Practice Portal reporting period opens up on December 25th. We're not going to go through them in the interest of time, but they're here as a reference for you, and it will be available for download. Next slide. This may not be entirely surprising, but grappling with forecasting clinical labor expenses may be the most daunting aspect of this process. To that end, please use this thought model to begin thinking how your practice should invest clinical labor, time, and resources to improve care delivery for your patients. So first, how has risk stratification affected the number of patients you will care manage? Will you need to add any care managers or additional care management staff? Can your current providers handle the practice's overall patient panel size? Do you need to add members to the care team to accommodate larger panels, or do you need to recruit new participating providers? Third, how can you leverage your current staff? If you move, for example, RNs from care team roles directly supporting physicians and providers into care management roles, can you replace them with MAs or LPNs? Fourth, system sharing of resources. And this one is really quite challenging. We absolutely recognize that fact. So you need to figure out the level of resource intensity your practice needs. So for example, how many care managers or behavioral health practitioners do you need on site? And for how long each day? Do you need them there just a few days a week? Do you need them there full time? Finally, if at all applicable, can you share those resources with other practices to defray the operating costs related to integrating those additional services into your office? Next slide. So finally, here are some key tips for how your practice can continue refining your financial operations and budgeting processes. First, know your practice. Work with your team and recognize the expertise of your staff. Don't be afraid to hire a consultant, but be very mindful of doing so, and be sure to understand who the consultant is and what services they can offer your practice. Again, we need to reinforce that documentation is key. When it comes to financial operations, document, document, document. Finally, engage your accounting team. I know that this can be difficult, particularly if you're coming from a clinical background or practice administration background, but it is really important that your accounting team understands going into the CPC Plus program year what your goals are and how you intend to invest resources into your practice. Second, try establishing monthly check-ins. So by moving to monthly financial checks, you can review your documentation to catch any deviations from your budget. It's easier to correct any issues that arise earlier rather than later. And finally, it will ensure that you will be in compliant with the reporting requirements because you will have an ongoing process for managing the financial operations and budgeting data. Finally, reach out. Create a team of practices and work together if that's something available for you in your region. If not, try doing it on CPC Plus Connect. Share best practices, share costs as applicable, and ask questions. So peer-to-peer engagement and learning is incredibly powerful. We cannot overemphasize just how much you can gain by engaging one another rather than engaging program staff. Next slide, please. So here's some resources to help you get started with financial reporting. All 5 of the documents here are available for download on today's webinar or can be found on CPC Plus Connect, which is the 6th resource. We strongly encourage you to download and review all of these resources. The CPC Plus Financial Excel-based tracker is totally optional. It is a tool that CMS developed to assist you. It is customizable. You can do with it what you will, but it is intended to provide a working document that you can use to get a better sense of what you need to be reporting and tracking for CPC Plus. Next slide. And with that, I'm going to ask my colleague, Amy, if we have any questions that have come in through the Q&A that we want to raise.
Oh, yes, Joe. We've gotten lots of questions, and I really appreciate everybody taking the time to put their questions into the chat. If we did not get to your questions today, because there are, as you can imagine, quite a few of them coming in, we are going to be following up this presentation with an FAQ, a frequently asked question document that will be delivered as part of your On the Plus Side newsletter. So again, if we didn't get to your question today, in the chat, we're going to be asking some of these questions to our practice speakers and to our CMS team as well today, but I know we won't be able to get to all of them. So there will be that frequently asked questions document coming your way that I think will clarify a lot of the questions that you have too and concerns. Just a quick reference too, there have been some questions that have come in about how you can use your CPC Plus dollars from CMS. Again, we do have the payment FAQ that's available currently on Connect, so I encourage you to go and reference that document for any questions specific to how you are allowed to use CMS CPC Plus funds. Again, unless you're specifically given guidance by your other payers, you can spend your CPC Plus dollars that are coming in from your payer partners in ways that are different from those rules that extend only to the CMS CPC Plus fund. So hopefully that answers some of the questions that have come in as well. So let's start with you, Mary Beth. We got lots of great questions that came in, and people were very excited by all you had to offer, and we can follow up with you afterwards in terms of if there's some additional information that you and documents that you have that you might be able to share with everyone on Connect. But just wanted to ask a couple of clarifying questions. So question, it sounds like Tri-Valley PC is using empanelment to spread common shared personnel expenses across participating sites. Is that correct? And we're assuming that that method is allowable within CMS, with CPC Plus.
Yes, that's exactly how we're sharing or spreading our shared costs is through empanelment, through panel size.
Fantastic. And how many attributed patients do you have in CPC Plus?
Attributed through Medicare, we have across 7 offices, shoot, I just looked this up. I think it was around 9,000. and then another payer partner is a little bit more than that. So roughly out of all of our patients is about 30% of our payer, or 30% of our patients are being funded for CPC Plus.
Great. So with your tiered provider job descriptions that you described, can you confirm that only a portion of the time was attributed to CPC Plus?
That's correct. What we looked at was just the time spent by the physicians on CPC Plus goals outside of their traditional face-to-face encounters. So this is additional time that our docs have been spending on the care delivery requirements since the beginning of this year.
Fantastic. And just, I know you already described this, but could you give us one little more synopsis about those tier categories that you described?
Sure. We had the first tier, which is our general physician involvement. So that's every physician in the organization has an expected level of involvement. And then after that, we have our site leads, which each of our 7 sites has 1 lead. And then we have our clinical coordinator, who oversees all of Tri-Valley and our clinical objectives. And we also have our eClinicalWorks lead physician, who is really our champion in documenting everything and making sure that we capture what we need to in the patient chart. Fantastic.
Tamara, let me pitch a couple questions to you. So a question came up, what percentage of your time is spent on CPC Plus?
I would say probably maybe 60% of my time, maybe 50.
Great. And then in relation to how you're tracking the salaries, are you also allocating employee benefits as part of that calculation?
Oh, yeah. Salary plus benefits. Yep.
What about any other, when you're hiring new staff, or if you've hired new staff, what about any equipment that those new staff needed?
Yeah, we did. And actually, we hired 4 specific positions, 2 behavioral health clinicians, and then 2 RN care coordinators or care managers. And the supplies that we attributed were like the computers and the phones, and I think we even did the desks, but we did not do the space. I think that after you get all of the time and expenditures from the different, just from labor, you have spent about everything that you have coming in. That's what we found.
Well, and that's a good question, too. That brings up another question that came in, and Chris, or from our CMS team, what if people do end up spending more than the amount of money that comes in from CPC Plus on achieving their CPC Plus activities and care delivery requirements?
Right. So, good questioning. This has happened in CPC Classic, and so what will happen is we want the practice to report accurately of what was received, CPC Plus, right, and then what was expensed. And we should see, with that calculation, we should see a deficit. We want to see maybe, are the care management fees, are they sufficient? Are they covering the work that's needed to be done?
Okay, so what about the flip side of that? What if practices didn't spend all of their CPC Plus dollars? Can they carry it over to the next year?
They can, yes. For instance, if for 2017, if it's put towards the end of the year and you have quite a bit left, that can be used for the following program year.
Great. So we got several questions, Chris, that came in about the difference between how they're using their additional CPC Plus resources now as opposed to the way they were providing care and delivering it prior to the start of CPC Plus. So, for instance, with your physicians, obviously they were already providing clinical care prior to CPC Plus starting. How do they account for that differently, or should they account for that differently as they're part of the program now? So their clinical time, and then, of course, the other activity and ways they're spending time specific to CPC Plus.
Right. So for the clinical staff, there's in one of the handouts, we have sort of the activities broken out, and you'll see, traditional visits. Those happened prior to CPC Plus, and those are still continuing. And so we'd want the practice to report, the most accurate number that they. From a forecast and just a reporting for 2017.
Right, because that clinical care is really important aspect, a vital aspect as part of CPC Plus. So really attributing the time of all your practice staff as it relates to the care that you're providing for all of your patients in the practice. So, there's been a little concern from some practices that maybe, by the time the quarter four reporting happens and they need to report on these expenses, they might not have received yet all of their revenue from other payers that they'll be attributing to the care that they provided as part of CPC Plus in the current year. How should practices address that if they don't have all the revenue information in yet by the time they have to submit their reports for expenditures?
Right. So yeah, we understand that there is a timing issue. Especially with the last month of the year. You have the month-end closing the books, and for those that need additional time, we can provide an extension similar to what we've done for some of the care delivery reporting. For those that do need that time, please reach out to support, and we can we're willing to work with those practices.
Great. Thanks for that. And even though we know that there's going to be an on-demand webinar that's coming soon that will really walk the practices through the process of the reporting that they're going to be doing in the practice portal, the worksheet that we provided to the practices, does that give a pretty good estimation of the different types of categories of expenditures and revenue that the practices will be expected to report on in the portal?
Yes, that's so when the practice goes into the portal, this should be more or less an accurate representation of the different categories that they will report. Great.
So there's been some questions from practices about the revenue that they're getting from other payers that are partners in CPC Plus. What if they don't get the same kind of breakdown or report on those revenues from those payers? How would you recommend that practices deal with that and get that information?
Right, I understand that it's a tough task to try to break out, to try to identify the revenue you're receiving when there's no breakdown. And I would ask that the practices work with the payers if possible to try to have that specific breakout for this model, because this is really, we want to see if the revenue, if the resources that are being provided are sufficient. And if there are issues with that, then happy to listen to any practices that are dealing with that.
Great. And just to clarify, a couple questions have come in just to understand what that reporting period is. So reporting for quarter four is scheduled to open on December 25th and will go until January 19th. And there will be also an extension period that practices can apply for as well. So it will go well into 2018. Joe, I know we're rapidly running out of time. Are there any final questions that you identified that we should pitch to Tamara or to Mary Beth or Chris while we still got a couple minutes left?
None at this point, Amy. There's a whole host of questions, but I think that we are probably better off capturing all those and consolidating them into a Q&A, and then just wrapping up the webinar, given that we appreciate everyone's time and want to make sure that we end on time. Thank you so much for leading that conversation.
Absolutely.
Okay, so moderator, next slide, please. So we have a few upcoming CPC Plus learning events not related to financial reporting, but we did want to bring these to your attention. Not going to go through them right now, but this is here as a reference to you. You can also find these on your weekly newsletters and on the CPC Plus calendar. Next slide, please. So wrapping up, so a couple key takeaways I really did want to reinforce. The first is we understand that the whole CPC Plus financial reporting and reconciliation process is daunting. However, as you heard from both of our practice presenters today, it isn't as daunting as it first seems to be. It is something that you all really can do at the practice level. You have the skills, you have the expertise, and the resources are available as well. Again, a good place to start would be the CPC Plus Excel worksheet that is made available for download here or on CPC Plus Connect. Also, just as a reminder, we have 2 resources coming up related to financial reporting. The first is an on-demand webinar, which will be made available in November, and then an office hour, which will take place on December 14th. Finally, we really do value your feedback. Our intent is to always keep improving these events, and your evaluation input helps us change and improve CPC national events. You should be seeing a survey open in a browser window on your screen right now. This evaluation will take less than 2 minutes to complete. Your feedback truly is important. Remember, also keep these conversations going on CPC Plus Connect. Ask any of your financial reporting related questions and access and share resources there. As a reminder, we will also be providing instructions for accessing credit for this event on CPC Plus Connect as it becomes available. Next slide. And that wraps up our presentation for today. I would like to truly thank our 2 practice speakers and all of you for taking this time to join us today. With that, I will formally close today's webinar. I hope everyone has a fantastic rest of their days. Thank you again.
And just one quick reminder, this webinar will be available in its full recorded, that you'll be able to download on CPC Plus Connect. It'll take about a week before we get the full live recording up, but you'll be able to download the slides from this presentation today and any additional resources that we'll make available from the practice speakers we'll also post to CPC Plus Connect. So as Joe said, thanks so much everyone for participating today. We really appreciate your time and look forward to answering more of your questions both in our upcoming FAQ on financial reporting and also on CPC Plus Connect. Have a great day.
Thanks to all participants for joining us today. We hope you found this webcast presentation informative. This concludes our webcast. You may now disconnect. Have a good day.